For more on this, we're joined by Tim Waterer in Sydney. He's Chief Market Analyst at KCM Trade. Welcome back to the programme, Tim. Now, Iran says the Strait of Hormuz is closed, but the US military says it isn't. Is the market trading on the reality of the shipping lanes or just pure panic?
Good to be with you. Yes, I think it's somewhere in the middle. I think if you look at where current oil prices are, it's based on perhaps a short-term or temporary closure of the Strait of Hormuz, given that there are these reports of ships having been targeted. So I think that can create some reluctance of vessels to transit the strait. So I think we probably will see shipping numbers dwindle, and that's what the market pricing is expecting. Having said that, if we look at the level of Brent crude right now, it's very similar to where it was last month when the Memorandum of Understanding was signed between the US and Iran. So I think it's still at a fairly tolerable level for markets right now. Not panic stations just yet in energy markets, but look, if the next moves are further escalation, there could be more upside to oil prices then, and we could see a more adverse move from risk assets to the downside if inflation fears are triggered higher.
And we're seeing a heavy sell-off across Asian tech and chip shares. Are investors worried about the broader picture, or is this just a convenient excuse to take profits after a massive run?
There are some lingering concerns about the macro picture. Interestingly, today, the market started off positive, but then quickly turned negative. And I put it mostly down to SK Hynix, which you mentioned in the intro. So there's a bit of a rebalancing going on the back of its US ADR listing. That put pressure on the South Korean listing of the stock today. And once that sort of started to snowball, that basically caught fire across the rest of the market and dragged the Asian indices lower. So I think if we look at the chip outlook in general, what we're hearing from the likes of Samsung Electronics and Micron Technology in the US and even SK Hynix themselves, the demand outlook still looks pretty healthy. So I still think we could be looking for further upside in chip stocks, particularly if that selling continues and brings them more into play as a value buy moving forward. So yeah, certainly a little bit of pressure in the short term, while there are, I guess, lingering concerns over whether the profitability margins are sort of at their peak yet or not. We don't yet know.
Meanwhile, Fed Chair Kevin Warsh faces Congress for the first time this week. Will the seesawing in energy inflation push him to take a more hawkish tone than expected?
That's right. The Fed chairman, he's already shown hawkish leanings since he came to the job in May. And I think this recent spike in oil prices, that could put him a little bit more on the hot seat in front of Congress. So I think he's probably already going to be, on the hawkish side of things anyway. The market will be really looking to pass his words to see whether we're still looking at potentially a September interest rate hike from the Federal Reserve. So I think he'll keep his cards pretty close to his chest, but certainly the rise in oil prices that we've seen this week so far, I think that could give him more reason to lean into that hawkish messaging and prime the market for perhaps a rate rise in the US later this year.
Tim Waterer, great to have your analysis as always. Thank you.